Hello, everyone, and welcome to MilSpouse Transition Conversations. I am your host, Anna Larson. I'm a military spouse transition expert, and I am here to talk with you today about tax shock. So, let's talk about tax shock for just a minute because nobody really knows how it's going to actually look for them until it comes and smacks them in the face post military life. It's that fun little surprise when you transition out of the military and then you realize Uncle Sam is not quite done with you yet. So today's conversation, we're going to dive into why does your tax bill look different when you transition out of the military? Why is it getting bigger? And how to make sure you're not caught off guard. Also, what to do if you're adding a side hustle to the mix. Our expert guest today is going to give us the scoop on tax deductions you might be missing out on and any changes in 2025 that you would need to know about. The bottom line is this is going to help you not have to wing it because nobody likes a surprise bill from the IRS. So let me start with an introduction of my guest today, Christina Miller. Christina Miller is a military spouse of more than 15 years. Her husband joined when he was almost 30. So they used to be normal people. I love that sentence so much. I can't even tell you. We all long to be normal people. So they're originally from Idaho, but stationed at the Pentagon in DC. They have two kids of their own and are a host family for four foreign exchange students, which is amazing. Only a few international wars have broken out so far, as they have France, Germany, Spain, and Italy representatives in their home. Christina has a degree in consumer and family finance from Ohio State University. Go Bucks! And has her PMP. Now, for the past more than 10 years, Christina's been doing tax preparation work at various places, including Vita centers on military bases or in the community that offer free tax services. She loved that work and considers it her favorite job. She currently works as a business analyst for a company in DC, but still does tax preparation on the side as an enrolled agent, which is similar to an accountant. She is authorized to represent taxpayers to the IRS for tax related issues. Christina loves to read, volunteer, and help people with their finances, which makes her a huge nerd according to her family, but she is okay with that. Hi, Christina. Welcome.
Hello, I'm so excited to be here again.
I'm so excited to have you back with me today. Last year, we talked about 2024 and what the world looked like then and the taxes looked like then. And I remember you saying, I love talking about taxes. Anything changed?
Yeah. No, well, yeah, only a tiny bit. I still love talking about taxes. One of my responsibilities is a contract with the IRS. And that part, I have a beef with the IRS. But taxes in general, I'm pretty sad with.
Who doesn't have a little bit of a beef with the IRS? I'm just throw that out there. Here's why I'm so excited about having you here today. Taxes are very scary for people like me who don't fully understand all the ins and outs and the forms and all the little things and the preparation. So as a professional, you have your hands in this all day, every day. Military families are transitioning out of the military over the next year. They can set themselves up for success before tax time comes around and hits them. And then they're like, what? We owe thousands of dollars. This has never happened. Why is this happening? Why are transition military families seeing such a difference in their tax burden compared to what they'd always had before?
One of the things that is a common selling factor for the military is that you join the military and you're going to get all of these in payments of various kinds, right? You get all these benefits and you don't have to pay for healthcare. You don't pay for your housing, like those type of things. Especially if you have a specialty pay, you're going to get paid extra to do a certain job. It's part of the appeal of joining the military is you get some special privileges, not to mention your military discount at places. So it's one of those incentives of why you stay in the military as your peers in the private sector are getting pay raises and other kind of compensations as you're in the military and you're like, oh, I'm making less. But there's actually a lot of benefits from the tax code when you're active duty. So as you start to get out of that and start thinking about getting out of the military, there's some things you want to take into account because suddenly income that you had before is going to be taxed. And so to you, it feels the same because you get this one payment like twice a month and you pay your taxes and you go along your way. But this time, everything you're going to earn as you get out of the military is going to be taxed. And it creates quite a different story for you as you go down that road and as you pay that first tax bill. So it's one of those things you don't anticipate just because there are so many benefits that you get from being in the military, things like your BAH, OHA, COLA, and your BAS. So there's just payments you're getting you might not even realize, and those were not taxed before.
So in addition to losing the benefits that you're talking about, the income that you're generating after transition to make up for that loss of benefit now all becomes taxable. So you're increasing that tax burden.
Exactly. You have more income and you're in a higher tax bracket.
So there's a couple of things that you can do to set yourself up for success. Can you share with everyone, like, what would be your recommendations as an expert in this area? What should military families be doing in order to prepare for this time frame?
I would start with as you're exploring your different job opportunities that maybe you're being offered or considering. In your MyPay, there is a total compensation document in there that tells you how much all of the compensation the military has given you is worth in the real world. And so that is the perfect place to compare apples to apples, what you're looking for based on what you currently get. It's individualized in MyPay. So that'd be the first thing I would do. The second thing I would do is I would explore, I guess it depends on where you're at in the I'm going to retire stages, but there's options of places that are states that are tax friendly to military pay. There are options for looking at your total compensation package, maybe other ways to do non-taxable benefits. But that would be where I would start, is to begin to look at what you're currently getting and try and get something comparable with all things considered as you're trying to get a job offer or position.
Thinking about that total compensation, that's in dollars amount, all of the different benefits, but that's not your total compensation you're talking about. That's not total taxable compensation on
Correct.
the military side, right?
Right.
So we want to make sure, make that distinction there, that it's different.
It's exactly that. The military is telling you this is what your actual employment is worth in the real world. So if you're saying, I'm about to go in the real world, I want this document because here's what I actually was getting compensated in the military. So if you look on your MyPay, it's it'll say total compensation. There was one other thing.
I think it was looking at the IRS tax withholding form. This will be all in the show notes too. I just dropped the link that Christina had provided me that was the tax incentives by state. So you can go to that military.com site and it will show you by state what the incentives are for each state, so that you can be super smart when you're saying, we're going to move to, let's say, New York as an example, and then you can actually calculate a little bit in advance what that looks like for you.
Exactly. There are certain states that don't even tax your military pay because they want you to come and homestead there so that you're not having to pay extra. They want the prior military experience, and then they have job offerings usually to get them to come to their state. So it's a good way to save some money on taxes that way as well.
You said there was one other thing that you would recommend that they do to set themselves up for success.
One thing I would do is filling out your W-4 properly. As you get your new position, if you fill out the W-4 properly, then the taxes that they take out should be accurate with what the IRS would anticipate based on your family situation. But that's going to be, we can talk about that more.
We're going to talk about it later. I've so many questions. Let's talk about entrepreneurship. A lot of transitioning military, both veterans and then also military spouses, are moving into entrepreneurship where they're owning their own business. And this usually looks like either a sole proprietorship or an LLC sole proprietorship. What would you recommend, or what do they need to be thinking about if you're taking that side hustle and you're going to be turning it into income?
So this is a good way to increase your income in a unique way, and also write off things that you might not normally have been able to do before. So things that you could consider is, a lot of times people started out as a hobby, but then you're starting to get income from it. So the IRS allows about 3 years of, if you had income coming in and your expenses were more than your income. So you're showing a negative income on a hobby, let's say, for 3 years, they're okay with that. The 4th year, they're going to say, this is a hobby. We're not going to let you continue to deduct things. Maybe that's starting out a little too high level. Basically, you are going to take something you're doing and you're going to start charging people for it. So let's say doing taxes, right? If I want to do that on the side, I would offer my services. I would collect people's income, and that's going to go on to a document called a Schedule C. This document actually shows you what you can deduct for a business. The top part is like all about you and what your business is. And then in part 2 is where all of those expenses go. And all of the types of expenses that you could possibly deduct that the government allows for when you're receiving income as an entrepreneurship. This would be a good foundation of knowing what to look for in things that you could deduct. As you grow, you may want to get into being a bigger business and different tax documents and all that kind of stuff. But just as starting out, that form could be as simple as I made $100 and I am going to expense $50 in my fee to get it started. And so your net income is going to be $50 of entrepreneurship income. So that document itself is a great roadmap to what exactly can I deduct for my business?
Yeah. And I know this is not an entrepreneurship tax show, but as a sole proprietor, something to be aware of is that if you're using contractors, you have to make sure you're completing tax forms for them as well. So don't, as a business owner, don't forget your responsibilities about reporting taxes for other people.
Exactly. And that deadline's January 31st. So you got to get your 1099s out the door if you're going to employ other people.
Let's move into write-offs, Christina. So this is the big question. What can I write off? What can I not write off? How can I get around this giant tax burden I'm not used to? What things do I need to be aware of? I'm sure this question comes at you all the time, right?
Yes. How do I get out of my tax bill?
Yes.
Exactly. Let's start with standard deduction versus itemized. I think sometimes can be a helpful conversation. So the standard deduction is basically the government says, hey, we know that you have expenses that occur just from being a U.S. citizen. We know that you pay mortgage interest. We know that you contribute charitable contributions to 501c3 organizations. We know that you pay state tax and sales tax and all of that stuff and medical. So basically what they say is we have two options. We can give you a dollar figure and you can use the standard deduction, which I forgot to look at what that number was, but probably somewhere around $28,000, maybe 29 this year. So we can use that and say, you know what, IRS, I don't want to give you all of the data from my mortgage and my sales tax and all of that. I'm just going to take that $29,000 and I'm going to take that straight off of my income. Or if you're a person who's like, man, I contribute a lot of money to charity, my mortgage is out of control, all of those things, you can say, instead of you giving me that number, I'm going to fill out what's called a Schedule A, and I am going to list all of the things that I want to deduct, which I'm allowed to. So if my mortgage interest is high, my sales tax is actually maxed out at $10,000, but they're looking at changing that. Anyway, there's a bunch of categories that you can do so that you can say, hey, I actually spend a lot more than the average American who might only be spending for married filing jointly $29,000. I want to tell the government, these are all the categories I've spent these expensible income expenses into, and I want to take that off of my income so that you're not taxing me on it. And so that's the difference between the standard deduction and the itemized deduction. And so if you're going to itemize, a lot of families, they don't buy a house, they don't have large purchases necessarily throughout their military career, but suddenly you're presented with the opportunity to go and buy your first house. As you're getting out, this is a great time to start looking at itemizing, in which case you would want to save your receipts. You're going to get a mortgage interest statement. You may have sales tax depending on the state you're living in. You would have property taxes, charitable contributions. These are all things you would want to keep record of because all of those things add up to where you can subtract them straight from your income. And so you can take the standard deduction, and a lot of people do, but you may get to a point where it's more advantageous to take the itemized deduction. And so that would be your write-off. There are a lot of changes probably coming next year because the Tax Cut Job Act expires this year. So we may see more changes next year. But for right now, that's the general consensus is most of the deductions you're going to get are on itemized deductions. But as we just talked about with doing a business, there's also deductions there. There's also deductions you might have if you have a rental home. So military families sometimes do those things, and those are other ways to get deductions.
So quick question for you. What kind of records or documentation for itemized deductions do you need to have on hand, and how long and in what format do you need to keep them?
You actually can be pretty casual with your documentation. Unless you're really doing some major deductions where you're trying to write off all your income, the IRS probably isn't going to come and hound you about it. I keep a spreadsheet. I know one year we lived in Ohio and I kept a spreadsheet of all the sales tax that I paid because I was just curious how much in sales tax I actually pay. it could be something as simple as that. It can be estimates. Some of those things you're going to get a tax document that says how much you paid in property taxes, how much you paid for mortgage interest. But charitable contributions, you might have a slip from Goodwill. I would write down what you donated and maybe estimate the dollar amount. It's not going to kill you if you didn't have any documentation. You should be okay. But in the event you had a lot and you have a higher chance of being audited, it's always wise to have documentation of what you're writing off. As to how long to keep it, IRS, there's a lot of caveats and this and that. But in general, I would keep it for 7 years. I would keep all of your documents for 7 years. Generally, if they're going to come and audit you, they can go back up to 3 years. If they find some reason or something sketchy, they could go back, ask for their backup to maybe more. But in general, 7 years is a good amount of taxes to keep. And 3 years is usually what they could, as far back as they could go, if everything looks okay.
When we're thinking about those deductions, what is it that normally a military family would deduct, but they are no longer able to do that? What's something that they start to count on, and then all of a sudden transition happens, and now it's like, oh, wait, we don't get that anymore.
Right, exactly. For the most part, it's the income that comes from your BAH, right? Your housing allowance is suddenly, you don't have a housing allowance anymore. You just have an income. Anything that you were getting for housing allowance wise, your BAS, OHA, COLA, and if you had a spouse or just a military member who deployed a lot, all of that income, anything you make now is going to be taxed, right? You no longer get these special tax privileges of income, even if your spouse travels or you travel for work all the time, just like as if it was a deployment, you no longer get that tax-free benefit. And so you lose that. If otherwise the tax, I don't know how far back to go. Now I'm dating myself of how long I've been doing this, but it used to be like there were a lot of things that you could write off on your itemized deductions. Right now, for regular people, the only thing you can really take as a military member is additional moving expenses. We talked about this, but basically, if you have moving expenses that you've had to endure because of a move and they were not reimbursed through the military pay, then you can actually deduct them on your taxes. However, that is not available to the general public. That's only for military members who have additional expenses that they had to pay that didn't get covered in the reimbursements that you would normally get.
Yeah, and this is a rogue question, but correct me if I'm wrong, that final PCS move does not count. If you get reimbursed for it, if it's after your DD 214 date, and my understanding is that you cannot write that off. You're not considered military, even if it's your final military move, if it happens after your retirement date.
That sounds about right. That does that legality. I haven't actually looked at the law on that. I can fact check that.
Okay, we're fact checking.
At this time, I want to let you know that we did in fact check, and I am linking an article from military.com into the show notes where it talks about the fact that you will get reimbursed for a final PCS move up to 6 months after your DD 214 date. They do, however, even in the article say a word of caution. These are general rules for the DoD, but each military service has its own rules and regulations, and it can change at any moment what they offer their troops. So always check with your local transportation office for the latest on what is available to you. All right, now back to the program.
So in your line of work, I'm sure you talk to military families all the time about taxes, but what's the biggest mistake military families making when it comes to their taxes?
Actually, the biggest thing that I've seen is military members who have purchased homes before, and then they rent them out as they move on to the next base. There's a lot that goes into having a rental property, and a lot of times families will not recognize that there are some deductions that they can claim that maybe they didn't understand. And so a lot of times it's called a Schedule E, but if you have a rental home, I see a lot of families miss out on benefits of filling that out properly. When it comes back to bite you is when you go to sell that rental home, and then there's a lot of tax implications for it. So I would definitely recommend, if you're going to rent out your house as you move, consult with a tax professional. You only have to do it for the 1 year. If you just learn how it works, you could do it if you want to do your taxes yourself. I respect that. But learn how it works first, because a lot of families may see a big tax bill when they go to sell it, or they missed out on a lot of deductions they could have taken over the years in the meantime. So That would be the biggest one. Other than that, just being unprepared for the tax hike that they're going to get in as they transition over to I'll call it a real job, right? A private sector, public sector job.
But it's civilian world job, which is
That's a better term.
it is a totally different experience, though.
I'm not downplaying the role of a military member. Do not get me wrong, but it's just a different world. It's just a different world.
Definitely. So let's jump back to that W-4 for a minute. You were talking about
Yeah.
filling out a W-4 correctly. Tell us a little bit more about what that looks like. What does it
Okay.
mean?
Yeah, exactly. So when you start at a new job, or actually every year, you really should analyze your W-4. So it's a document, it's a tax document that you give to your HR. It has changed majorly in 2022, I think. So for the current W-4, they've tried to really simplify it. And so basically you put in your name and your information, and then you say whatever the tax category you are. So I'm married filing jointly, I'm single, or whatever your tax scenario is. And then it might just be that. That's all you need to submit. But there's also sections for I have a spouse that also has a job, and now I need to calculate how to really fine tune my tax liability there. But if you fill that W-4 out correctly, it should take out the proper amount with your HR every paycheck so that you're not stuck with a huge bill at year end. The only thing caveat could be if you're not accounting for investments, or if you sold your rental property, or like who knows, like all the other random things. But in general, just for the income you're getting from your employer, if you fill out that W-4 correctly, they will know how to take out the proper amount of taxes based on your income.
Because I work for myself, I don't know that I've even looked at a W-4 for a really long time. I remember when I was young, it was just like, how many deductions do you have on?
Exactly.
Let's guess. This year it's 3.
Exactly. And you play with it a lot. And it was a guessing game. And then you can put in that you have 2 kids, and then you multiply that by $2,000. They can really fine tune it to where you aren't paying excessive amounts of taxes, but you have to look at it. You have to pay attention to that.
And that's really good advice for both military members, but also military spouses who are for the first time maybe going out into that civilian job world and having to fill out a W-4. Let's talk about healthcare really quick. Can you deduct healthcare expenses now if you are on that TRICARE Select and you're out and you're seeing these like private, or not private, in-network, out-of-network, those kinds of extra payments that are now happening when you're not a prime TRICARE member on active duty going to an MTF facility? What advice would you give families when it comes to the healthcare side of this?
So this is an interesting question. Yes, as a general answer, you can deduct those things if you're going to itemize. However, you have to really have a good amount. It has to be 7.5% of your gross income. Anything over that you've spent in medical expenses can be deducted. So it's very convoluted and ridiculous. If you find that you've had a year, or you're going to have a year with a lot of medical expenses, that's when you want to keep track of all the things you paid for, your prescriptions. There's actually like a whole list of things that you can write off as part of your medical expenses, but your medical premiums, and you got your eyes checked, you got dental work done. All of those things can be added up, and they will contribute to your itemized deductions. It's really only worth it if you're in a year where you really had to spend a lot of money on medical, and sometimes you don't know that's going to happen. So it's a good idea to keep your receipts in case that it ends up being like that. If you make $100,000 at your gross income and you don't spend more than $7,500, then you can't write any of that off. So you have to pay a lot in medical expenses compared to what your income is. Yes, keep track if you're spending a lot. If not, it's probably not going to be any benefit to you to keep track.
That's a good distinction, because one of the conversations that happens when it comes to taxes is, oh, well, now we're going to pay a lot more in healthcare, so we can deduct that. Setting that realistic expectation for families transitioning out, that doesn't mean you're automatically going to suddenly have all of this deductible stuff on the other side, such as healthcare or charitable contributions or things like that. Thank you so much for breaking down what 2025 taxes look like, what military families that are starting to leave service really need to be thinking about. I just have one final question for you, which is really like, what would be your one piece of advice you would leave with those who are listening today? If there is one thing you're like, okay, please do this, make sure that this happens so that you're ready to go.
Okay, perfect. I would probably advise to really look at your total compensation as you're going out and as you're trying to figure out what to do next. Look at what you're what benefits the whole big picture is for the military. You can take, and what I would do actually is I would take that total compensation. And one thing we didn't talk about this time very much was the tax estimator. You can go on to the IRS's website and there's a tax withholding estimator. You can estimate how much you're going to now pay in taxes based on the income you think you're going to have. And if you just have a ballpark figure, all you have to do is fill in page 1 of that form and just ignore the rest and just see, as a married filing jointly making $100,000 a year, how much in taxes am I going to pay? And so you need to, that is one way to just look at the whole picture, is those two things, your total compensation package, and then see how much of an impact these taxes are now going to have on you. And so that you can evaluate, like, where are we going to land and what kind of income do I need to make so that we still feel the same?
Yeah. So I will say that Christina and I did do a live stream actually a year ago about this. And so I will link that live stream because she does go through the tax withholding estimator in that video. And so you can actually explaining how to fill it out, what each of the individual little pieces means and all of that. I'll make sure that is linked. So anyone who really wants to dig into that or wants some extra advice can get that from you. Christina, I just have to say thank you so much for joining me here today. Talking taxes is always a pleasure when it comes to talking with you.
You're so sweet, Anna. You're so sweet. I love this. I appreciate that you invited me on here.
Will you please tell everyone if they want to reach out to you in a professional capacity and ask questions and or get your support, how can they do that?
Yeah, absolutely. I love to help people just answer questions. If you're stuck on a tax form or on H&R Block or something, and you just need a real person to ask, please just reach out to me. I don't charge for that. If you need me to actually do taxes and we get a little more involved, then we can talk, we can discuss that. But like, sometimes you just need someone to say, I don't understand what I'm looking at here, and I would really like to finish my own taxes. So please reach out. Obviously, I've got my LinkedIn contact right here. And then this is my professional email for all my tax stuff. You can reach me there with questions or, hey, I don't want to do this anymore. Could I just throw all these documents at you and you help me get this done? Yes, I can definitely do that. But
I'm pretty sure everybody who's listening has had that feeling at one point in their lives. Please just take the
like April 15th. That's usually when they're like, I just can't anymore.
This is why we do this show early, right? Is so that you're not under the pile of taxes of people saying in their desperation, help me, help me.
Exactly.
Okay, so thank you again for being here with me today. When you're transitioning, there's so many things going on in your life. There's so many things going through your head. There's so many things that you have to keep track of. And so this is something you can do a little bit in advance. You don't have to wait till the last minute. Or if you are transitioned, you still have a chance to go to that tax withholder estimator and figure it out so that you are setting yourself up for success with that next new job or your journey into entrepreneurship, whichever direction you end up going. As we continue to navigate this ever-changing world of transition, please reach out and trust MilSpouse Transition to continue to bring those resources and answers. Join the email list in the link so you can always get notified of any of the new things that are coming up, including these shows, podcasts, and resources that we find for military families. I love LinkedIn. I'm there all the time. So jump over there. And when you're connecting with Christina, make sure you connect with me as well. Yeah. And then last but not least, whatever social platform you are listening to this on or watching it and or podcast, make sure that you hit like, subscribe, and follow. And we would really appreciate that. So Christina, once again, thank you for being here. And I look forward to 2026 where we do this yet again.
Okay. Okay. I'll book it in my calendar.
All right, everyone. Thank you for joining us, and we'll see you at the next MilSpouse Transition